Okay, welcome to Coaching with Leticia. I'm Leticia and I'm thrilled to have you on this journey today. My motto is innovate your business, elevate your life. So whenever you listen to my podcast, either one of those things will be the focal point. So today we are going to be focusing on innovating your business, specifically on the pros and cons of property investment. Now, what makes my podcast unique is that I like to link relevant theories to the topic in question. So, for example, today we're going to touch on PESTLE analysis, maybe the Porter's 5 forces model. But before we delve into this topic, I just want to give a shout out to my new and current listeners. Please do not forget to share, like, and subscribe to my channel so you don't miss an episode. Now, without further ado, I'd like to introduce my very special guest today, Stafford. So he's a property investor. So Stafford, just tell us a little bit about yourself before we delve into the whole property journey. Just tell us a little bit about yourself that you want people to know.
Well, name's Stafford. I've been investing in property, I would say, for the last 18 years. As it's been right now, giving away my age a bit.
Well, yeah, 19.
I did obviously start early with one of my own properties, which I kind of got into it directly by buying my first flat, and I kind of took it and kind of grew it from there.
Okay.
In terms of myself, in between then, obviously, I've had various jobs. I did mainly in sales. I was mainly target driven as an individual.
Okay.
Which I took on board, and obviously it helped me to expand my business.
Excellent. So what motivated you? Because you said you had other jobs. What kind of jobs did you have? And then what motivated you to get into the business industry? Sorry, the property industry.
Well, there was a couple of things. I was always kind of indirectly exposed to it. My father himself, my father, he was an architect. So from young, I was kind of somewhat around building sites, and because he used to do the drawings and the constructural calculations, etc. I kind of saw it as such. It's kind of fun sometimes going on building sites as a kid, growing up. And it was more of a case of like I was quite competitive in terms of what I actually did. I used to play basketball.
Oh yeah.
Yeah, and so that obviously led me to be a driver, but also it was a certain type of lifestyle which I wanted to live. And you need to get money at the end of the day, and real estate was one of those ones where if you want to retain your wealth, you really want to get involved, obviously, within it. So that was really my main focus, obviously, to live a certain lifestyle and obviously maintain wealth. So property is not a bad idea in order to park it if that's what you want.
So just so that I'm clear, did you was you working a job and then got into property, or did you stop working and then get into property? What is it? What did
Well, I
you
was
do?
working, so alongside
Okay.
I was also working, obviously doing the
Right.
job, in order to get my first property as such. So that was obviously a benefit for it, but it was a case where the market was a bit different
I was gonna,
in
yeah.
comparison to obviously to what today's is.
Yeah.
I was trying to get my first property, just say at the beginning stages of our first financial crash
In
was around
2008.
2008,
Yeah.
roughly around then. So you could say it was at its peak when it came around then, but there was obviously still deals to go around.
Yes.
In terms of where you was actually getting it. I was quite fortunate to get my first one actually, because I did put an offer on it. It was a repossession
Oh
with an estate
wow.
agent, and I put in an offer. I wasn't accepted. But then the agent came back to me and said, the other person fell through. Would you like to put forth an offer? I said, all right,
Wow.
cool, yes. I put forth an offer. It got accepted.
Fantastic.
It was a nice 3-bedroom. It was above commercial premises.
Oh,
It's a bit
great.
tricky in terms of getting a mortgage then, but we managed to pull one off. And yeah, I had a property. So
Was it in or outside of
it's
London?
in London. So the properties I mainly deal with are inside of in London.
Okay. So would you consider investing outside of London? So I know obviously people that are trying to get into the property industry are trying to go outside because it's more affordable. Is that something that you'd recommend, or?
Personally, I haven't invested outside of London. The reason why I choose to invest with inside London, because yeah, the rates may be high, but you got more equity growth.
True.
That's what I foresaw when I was obviously investing back then. You could look at the charts and you kind of saw like how properties were increasing in value.
Right.
And even outside of London, mainly like the southeast, southwest was mainly like catching up as such. London's always going to be pulling away because it's the main capital.
True.
So if anyone is looking to invest, yes, there are deals you can get from outside coastal towns, depending on where you're actually renting universities in and around the United Kingdom. You could possibly get something then, but I'm not really conversed. I feel more comfortable investing somewhere I can get hold of within an hour. If I can reach there within an hour, sort any issues or problems or anything maybe, that's where I feel more comfortable with actually dealing with.
You said a word that some of my listeners might not understand, and the word was equity. Do you mind just breaking that down, what that means?
It's just basically the increase in value in terms of how much your asset is actually worth. So if you buy a home for 100,000 and say 5 years from now, the property is worth 150,000, your equity is £50,000.
Perfect. Yeah.
So
Excellent. All right. Good. So in terms of like the PESTLE analysis, just because I dropped that term earlier, was there any challenges? So for example, you mentioned in 2008, there was the credit crunch, 2007, 2008. So has there been any challenges in terms of political challenges, like when COVID came about, environmental challenges, social challenges? What were your challenges, or what are your challenges as a property investor? Like that.
I mean, the time when COVID came around, it was challenging. I thought it was going to be challenging, but I'm going to be honest with you. Where there's fear, there's opportunity. And I'm very risk adverse, you know. I've got quite a tolerance for that, and I actually did pretty good over COVID. To be honest,
fantastic.
I did manage to buy 4 properties over that time span.
Okay.
Because there was opportunities that came about.
Okay.
In order for me to do so. It was challenging at the beginning because obviously we didn't know everyone was going to drop down dead. The way that everyone was actually speaking. Then obviously people were worried about they can't go to work, so how they're going to pay their mortgage. How they're going to pay their rent.
Yes.
What were landlords going to be doing. So it was a main of the case you had to open up communication a lot with tenants, obviously, to speak for them. Thankfully, universal credit actually kicked in.
Right. Okay. Yep.
So we was able to obviously sort out some stuff through then.
Okay.
There was actually properties I was managing. I was actually helping landlords also manage, because I also manage properties sometimes.
Okay. Fantastic.
So there was some landlords I was actually helping manage their properties. So it was a case of just communicating with them, communicating obviously with the tenants, and making them understand, say, there may be a slight delay in terms of your rent actually coming in, or you may have to offer a slight discount.
Right. Okay.
Certain people experience obviously financial difficulties.
Yes.
So you rather get some rather than none.
Yes. Of
pay
course.
Bills on wherever it may be. So
yeah,
those were some of the challenges that you do. There were some properties which I was managing, I couldn't manage no more. I had to give back.
Okay.
Because it wasn't financially feasible for me to carry on doing it. Plus, it was also a case where it wasn't my problem.
Yes.
And it wasn't my property as such.
Yes.
And yes, it was helping to generate an income, but for myself, but it comes to a point of time where it's now becoming a liability.
Yes.
And so I had to basically cut that off and obviously concentrate on my own. So those are some of the challenges that we had, obviously, the COVID. But like I said, overall, it did turn out pretty good.
Okay. So just to touch on what you said about the tenants, because obviously recently, I don't know much about it, but I just heard about the rights to tenants rights at the moment. Do you know much about it, or
I mean, obviously
how it could affect you as a landlord?
I've kept my ear to the ground and obviously understood what the
Labour Party,
the previous government, and what the current government is actually proposing to do. Like, I know about the rental reforms, which they said, I mean, it works out. To me, it's a bit of a scapegoat, really. To be honest with you, because I don't see what's wrong with the laws you have in place.
Yeah.
Why would you want to? I don't understand how Section 21 would actually help a tenant.
Yeah.
As such.
Yeah.
You know, I mean, if the landlord yourself, you're happy with your tenant actually being inside your property and they're paying a rent on time, why would you want your tenant to move out?
Yeah.
You know?
Yeah. It's true.
It wouldn't. I mean, it's very rare the case like you, as a landlord, you want to come back and say, "Hi, I want my property back," for whatever reason. Maybe you're selling it because you got another investment elsewhere.
Yeah.
Maybe you're leaving the country. Okay. Maybe you're tired of it. maybe that the model that you actually have in order to how you actually managing your property and your books, it's not working out financially feasible for yourself. You need to get rid of it.
Okay.
So those kind of things. I mean, the Section 21. I mean, it doesn't. I just think it's just a waste of time. I think it's just talking points that the government are just trying to do to get people
sweeten
on
the deal, isn't it?
Yeah, of course. I mean, because I know they're talking about the notice period. They're trying to say you got to give them 4 months. Like who's gonna take a 4-month notice period?
Yeah.
I mean, if you go to view a property and you say, "Hi, I've come to view a property. I'm looking to move in the next 4 months."
Yeah,
they're gonna look at you like, "Why are you here?"
Yeah, it's true. It's true.
Do you know what I mean? What are we talking about
It's
here?
true. It's
I'm
true.
looking for you move within 4 weeks, not 4 months.
Yeah,
you know?
it's true.
The property's usually available now, or it's going to be available in the next 2 months, if that,
of course,
or weeks, and such. So it's really nuts. But I don't know. I don't understand. I don't understand who that is going to help at the time by telling somebody you got to give them 4 months notice.
That's a bit. Yeah, that's bizarre. I think obviously with Labour being in power, I think they're just trying to sweeten everybody by putting all of these legislations in place that really, when you think about it, who does it really benefit? Does it benefit?
I mean, it does help. I mean, does it help tenants feel more comfortable? And I believe they should feel more comfortable. I'm not here to say it's not landlord versus tenant, because you work together at the end of the day and you provide housing. I mean, the sector itself, I mean, relies on private landlords. 20% of people that rent rely on private landlords. So if it weren't for that part of the sector, then who would house these people? Where would they go?
It's true.
You know, because the government hasn't really got any money to
it's
house them. So I mean, these are the options that they have. So it's not. It's basically a pendulum. You know how you got to weigh it up, because the landlords itself, they wouldn't necessarily charge you extraordinary rates.
Yes.
In terms of rent, if their rates weren't high.
It's true.
You know, so
it's true.
Anytime that you increase costs, for example, if the interest rates, interest rate, if they start to increase, obviously my mortgage is going to increase. I'm going to have to pass that on to the tenant. I mean, it's simple economics. And that's to turn around and tell the tenant, "Oh, we're here for you. We're going to make sure that we're going to house you. And we're going to put a rental controls and we're going to put restrictions on there." It's ridiculous. But there's only so much. You know what I mean? There's only so much leeway as a landlord you can actually give a tenant. Because nobody's going to get in business if your costs outweigh your profits. It doesn't make any sense. You're going to go out of business.
Exactly.
So
I'll be interested to see how this looks in the next few years. It'll be very interesting.
Hopefully it works out.
Hopefully it does, because obviously rents are extortionate in London. They're really, really high. Affordable, unaffordable, call it what you like, but it's very expensive. And just talking about the property models, I heard you mention the business models. There are different ways to get into property. Am I right?
Yeah.
So there's things like lease option agreement, there's HMOs, there's rent to rent is really buzzing right now. What other methods or ways can people get into property?
I mean, those are some of the ones that actually, I mean, the easiest way, as you mentioned, is probably rent to rent. I know there's a few people that are actually offering the courses out there in terms of how to set it up and actually what to do. That does help you. There's property sourcing.
Right.
So if you're somebody who can go out there and obviously find a particular deal, and you can package it, and it makes fiscal sense to an investor, you could get them to invest their money, then you could take a percentage or a fixed fee for bringing that particular deal to someone. And once you obviously build that up and you start to package these deals a lot, then maybe you can have enough money as your pot to go out and invest in your own property.
Right.
So those are some of the easiest, because you don't need any money for that. You just need to be at the right place, right time, and be able to put two parties together.
Okay, so let's just delve into the place. Where can someone looking to go into property, let's just call it rent to rent, how do they find a property investor like you?
I mean,
because you're busy or living your best life, so then how?
I don't know.
Well, you know, because you said you're living a lifestyle, so I'm assuming you're
I don't know about all of that. But
so I think if someone's looking to get into property, how would they find an investor that is, you know, on yachts or whatever and traveling? Like, how do they connect with them?
Well, you need to be out there. So, I mean, Rightmove, Zoopla.
Okay.
There's other various sites you can go into, like Open Rent.
Yeah.
You could go on Spare Room.
Yeah.
Obviously of those natures, but it's a case of making a lot of phone calls and taking a lot of no's.
Okay.
It depends how resilient you are.
Okay.
you could come across somebody just at the right time, but also your experience too. Obviously, that plays a factor. But if you come across somebody and you say, "Hi, this is the business I want to do. I'm interested in renting your property. We have corporate clients from all over the world or all over England that are relocating down to this particular area, and we're looking for accommodation for them. We're interested in renting your property. That's something you'd like to do on a long-term basis, a 3 to 5 year term."
Okay.
Do you know?
Because I know people are doing that for students. So international students that are coming here, they're just opening up their homes. I can't remember what the word is called, where they take on a student, or they just have accommodation where it's like student dorms, just close to a university. So I know all of that is happening. Is anything else happening out there?
I mean, those are the main ones.
Or other schemes that people could get involved in, like lease option. Do you know what lease?
Yeah, I know what lease options are, but those are quite complex. It's not complex as such, but to actually get somebody to agree, you need to find the right person, the right situation, in order for that to actually work for them.
What is the lease option? How does it?
Well, essentially, what it is, just say for example, you had a property and you was looking to sell it, and I said to you, "Hi, I'd like to buy your property. However, I want to agree a price today, say 100,000, but I'm going to pay you those funds in the next 5 years. We're going to complete in the next 5 years."
Okay.
So there's a couple of things I might need to do. I might need to give you a little. But for example, you would need to leave the house. Where would you go if you owned the house in the meantime? It may be fortunate. You may say, "Hi, I don't really need the house as such like that now.
Yes.
I'm going to be moving abroad to wherever, my home country or wherever it may be.
Right.
And so I'm able to move out, and I can say, okay, great. What I would let you do, I let you make sure your bills and everything's covered, and maybe I'd pay you a little something more on top into that time period until I'm ready to complete in the next 5 years."
Okay. What if you don't complete?
And whether you feel smart, you'll have a clause in there to say that you could step out of it.
Okay. All right. Maybe. Yeah. That's right. Yeah.
But the benefit should be for the person who actually you actually agreed to buy the house from, is technically the house is supposed to go up in value. Right. So has that person really lost? It's the fact that they feel more comfortable. They've got a guaranteed buyer, and their bills are being covered, and they may be getting a little extra on top of whatever their mortgage may be.
Right. Okay.
Do you know what I mean?
So then let's just say the 5 years comes, we're coming to the end of the 5 years. Are we giving them the 100,000, or are we giving the person what the property is worth after the 5 years?
No, you're giving them the 100,000, or there may be a case where they may dispute or whatever it may be. So you may, well, the benefit is, just say the house dropped in value. Right. You agreed 100,000.
Right. So then that's what I'm expecting.
Yes, that's what you should be expecting. So you have to work both ways. Or if it's a case where you want to make sure the deal gets over the line, you may want to give them a sweetener, offer them, I don't know, 5, 10 grand, wherever it may be, depending on whatever the increase in, to make sure everyone's happy. Okay. It's all about relationships when you deal with property. It's very, very important. You need to understand and make people actually feel comfortable with you. Yes. Whether it's a tenant, whether it's an investor, whether it's the agent, wherever it may be. You need your workers, your tradespeople, everyone needs to feel comfortable. You need to be able to communicate with everyone at a certain level.
I love that, because that brings on to my next question in terms of the kind of skills, because you spoke about your sales skills from your previous job. So do you feel those skills, and what are the additional skills that you need to be in this business?
I mean, sales skills obviously help, because obviously it's my job to sell you the product or a dream or whatever it may be. If you're working in sales, and obviously you're only going to do that if you actually gain your client or your customer's trust. Yeah. If they trust you, because nobody wants to feel like they've been sold to as such. Yeah. Sales is when you feel comfortable and you form a relationship. And then they start to build, they have trust in you. So when you've got trust with somebody, it makes a transaction better, and everyone feels good. You get paid, they feel like they've received a good service. Everyone can go their separate ways, or whatever it may be. Or they come back to you and they get referrals. That's how it is. So my skills are mainly obviously speaking to people, making them feel comfortable, and building relationships. Honorable, like you have to fulfill your word. Yes. Integrity is very important. Yes. In terms of, if you say you're going to do something, by all means do it. If you can't do it, there better be a plausible reason why you can't do it. As such, I mean, you know what I mean? If you easily try to shove someone over, I mean, that's only going to work for you in the short term. Maybe beneficial in terms of financially, but it's only going to work short term. Your
Yeah.
reputation is quite important, especially when you're dealing with people.
Have you ever had that experience where you wished you never... Have you had a bad experience in property? Let me not put words. Okay,
yeah.
what are your experiences? It's just so that we can learn from it.
No. I mean, it hasn't been anything as bad as such, but it's been a case where I think it's been a case of more when lenders, for example, have let you down. They've pulled certain products.
Okay.
And the people that you've trusted, for example, it's very important too when you're trying to get deals over the line and you have a team. You're going to have brokers, for example, you're going to be working with.
Okay.
And your broker's quite important to you because they're the one they're going to be securing the financing.
Right.
So if your broker is good and they've got the relationship with the lender and they can speak to the managers or the directors and stuff, they've got the relationship, it makes the transaction a little bit better. When lenders, they start pulling products,
Yes.
it then becomes a problem because you could get everything all agreed on the surface, but then when you go into the final stages before you draw down on the lending, it can go to a senior underwriter.
Okay.
The senior underwriter could look at it and think, well, no, we're not going to do that because you haven't met this criteria.
Okay.
So I've been in a personal situation where I needed to remortgage a couple properties. They were all same property in the same block. The rate had run out, so what I was actually paying, and now we're to the base rate,
right?
And what I was paying, so I'm paying like 5%. It's more than doubled my current mortgage in terms of what I was actually paying.
Wow.
On the property itself, and I was waiting to get lending on another property.
Okay.
To then turn around and release the equity from the property. But the problem was, it was quite a complex deal in terms of because there was like 4 or 5 properties involved for the whole transaction. Essentially, it went to a senior underwriter from the property which I wanted to remortgage to take out the money so I could pay off these properties. They basically pulled the product.
Oh.
And it was on the basis I felt at the time. I'm not working with the broker right now. It's another new broker I got. On the basis of the fact that questions were asked and they didn't follow through and ask the right person the right question to confirm that we're okay to go ahead with this.
Okay.
Because I provided everything what was required.
Yeah.
And it was understood. It's when the senior underwriter went in there.
Okay.
Jay changed it. So my thing was about, well, hold on a minute. You've assured me at the time that we was able to proceed on this basis. I provided you the information, what you said. You haven't spoken to the senior underwriter in terms of obviously making this thing go forward, or you haven't got the relationship with them as you stated that you did to make sure it goes through okay. So, and that ended up costing me a lot of money.
Yeah.
I don't know where this goes. I was quite upset. I went to the financial service. I went to everyone.
Really?
Trying to recruit some of the money. Yeah, seriously. I was going to sue them. I was very upset. Because it cost me a lot of money.
Of course.
It cost me a lot of money.
Is that the most you've ever lost in property?
I mean, yeah, as such. I mean, it worked out as such in a long run. But
yeah,
you need to be, there's fine margins sometimes, when you can actually lose money.
So in terms of lenders, can we speak about bridging loans? Do you know, have you ever used one, or how does that work?
Well, it's essentially, bridging loans are usually like a quick form of financing a deal.
Okay.
Typically, you can get the money within 30 days. It could take a little bit longer. The quickest I've ever done it was 14. I don't know how, but we did it.
Wow.
So basically, you're borrowing a large sum of money to complete in the deal. And the lender itself will charge you quite a higher interest rate. So they may charge you anything from 0.5 to 1%. But they're charging you that per month of the total amount which you're actually borrowing.
Yeah.
They usually won't want you to pay it like monthly, but they usually agree anything from like a 6 to like a 1 year deal. So ideally, you want to use bridging loan just on a short-term basis. Typically, you will have a deal at a discount, so it'll work in your favor. So you'll be able to buy it, refurbish it, do what you need to do, then to refinance it to pull it on another mortgage.
How does one acquire a bridging loan?
You could have a go straight to the lenders themselves, or you could speak to your broker.
Okay. So do you have to get your credit score checked? Does your credit score need to be good?
Yeah, so ideally you need a good credit score. The property itself obviously has to value up, because they do send obviously a value in there to make sure it values for the amount that you're borrowing.
Okay.
They won't typically lend you the full amount. They usually lend you anything between 60 to 70%, 75% of what the property is actually worth. So you're going to still have to come up with your own money.
Yes. Okay.
As such, in between. Yes, your credit score is important. They need to have some equity within the property itself.
Okay, got you.
For them. So if you was to turn out bad, then yeah, they're going to take your property.
Can take
As such, and you're going to lose obviously your initial 25% investment that you actually put down. But it's a good way of obviously getting it's only for short-term finance. Yeah, it's not for long term.
I love that disclaimer. It's like
it's only for short-term finance.
And the hand gesture, just short-term it, yeah.
And you want to make sure that you've got an exit strategy.
Right,
so don't just enter into it thinking, yeah, I've got it, and then go seek an exit strategy.
Yeah.
You need to be aligning both things.
Right.
At the same time. You need to understand, yes, I want to get this lending. It's going to take you about a month to get it, if not 6 weeks, 7 weeks, whatever it may be. But you'll be working on the exit strategy on the back end to make sure you get out of that deal, because it's going to cost you quite a lot of money on a monthly basis.
Okay.
So typically you may be looking at something, say, you may borrow, I don't know, say 300,000. Depending on what the rate is, you're looking to be paying back in terms of just interest, probably about, say, 1,800 a month.
Okay.
Do you know what I mean?
Wow. So speaking about buying into property, would you suggest that one buys a property under a limited company or under your personal name?
It really depends on what your tax bracket is.
Break it down.
I'm not a tax advisor. So
I mean, like you say tax bracket, because obviously right now the capital gains tax is 25%, right? So what are you saying in terms of tax
if you're
bracket?
a higher rate taxpayer,
I see what you're saying.
Company. If you're a lower rate taxpayer, I'll buy it in your own personal name.
Right. So higher rate taxpayer, so that's over 100,000 you'd have to be earning.
Because once you break a certain
then when you're
like I'm saying, like anybody, you have to see tax advice, talk to your accountant. That's the best way to do it.
40% tax bracket is up to 50,000.
Something in that reason. I'm not too familiar on the ratings as such. I don't want to quote anything and be misquoted. But if you're coming to the reason why I'm saying that, depending on what your tax situation is, because if you have a limited company, then you're only paying corporation tax, and you can write off your interest. If you buy in your personal name, your mortgage payments, you can't write them off. As opposed to your limited company, you can. So, and this is the reason why I'm saying it's very complex in terms of where they've actually done it. 5-6 years ago, it was quite simple. You could buy a property in your name, whatever your mortgage was. If your mortgage was £1,000 a month, and if your property was £100,000 and then your mortgage was £500 and you was paying £1,000 a month, you could write off £500. Now you can't.
Okay.
They take the full £1,000 rent that you take, and they use that as your total revenue, and that's what you're taxed on.
Got you.
If you do it in your personal name.
Got you.
In your limited company, you can write off your mortgage. But it really depends on it can work out more beneficial for you if you're in a lower tax bracket to do it that way than if it was to do in a limited company. But you need to seek.
Definitely get an advisor, because I'm not an advisor. It's just definitely.
Like that.
Definitely.
If anyone's got over 3 or 4 properties, you might want to put it in a limited company.
Right.
And the reason why I'm saying put it in a limited company, if something was to happen and you was to get sued for it, for example, you got limited liability on the company. I wouldn't put too many properties if you're looking to build like an empire.
Yeah.
All in one company. I open up multiple different limited companies, so at least you can spread your liability around.
They've actually increased how much it costs to open up a limited company.
I understand. It's not really.
It used to be like £12, £20, now it's like £50, £60.
That's all right. It's minor, isn't it? But for the liability that you actually get, the limited liability that you actually get for it, it can work out. It's more cost beneficial,
Long term.
Yeah, of course.
Okay. Good to know. So what has been your success stories? Like, what has been like, do you know what? I was a bit unsure about buying into this property, but now I've done it, I'm glad I did it. Have you got a few of those?
Yeah. I mean, there was one property I was managing for a lady, and that's what I'm saying. It's very important about relationships. I was managing it for about 3-4 years. Old lady, she retired back in her home country, And then she said, oh, I'm interested in selling the property. So all because I've done a good job for her, for example, and we've communicated, it was nice. I paid her everything on time. I've done what I was supposed to do. I was always transparent with the lady.
Yeah.
She offered me the property and she gave me quite a good discount.
It's amazing.
In terms of me buying the property.
It's amazing.
So that enabled for me to actually buy the property itself at the discount. So for example, let's say the property is £100,000. It was marketed at £100,000. She gave it to me for something like, say, £75,000. And it being £75,000, you have to understand that when you're getting a buy-to-let mortgage, the lender itself will give you 75% of the value. So I was able to basically get the property on 100% mortgage.
Yeah.
Without me putting any money in. Yeah, there's some stuff I need to do around, but essentially, that's what I got. So basically, I got 100% mortgage, and I had £25,000 equity within the deal itself.
Look at that. So
that able to help me to obviously take out that equity, which I did, to buy somewhere else. And that's just through forming relationships.
So that's just one. Do you have multiple examples of that? Or?
I mean, yeah, I've done it before. I've done one where, for example, where it had a low lease, and I was able to come in and negotiate a lower rate with the person actually selling the property itself. It had a low lease. Thank God it was a share of freehold. So when you have a share of freehold, basically means that you've got rights to the land and you share it with the other people that also are the leaseholders. It was a fact of just having paperwork done. So it wasn't a case where you had to go to a freeholder, the person who owned the land, and say, hi, I'd like to extend the lease. How much would you want for it? It's another complex issue, which I don't really get into. But when you get a share of freehold, you're basically the freeholder and the leaseholder at the same time. And if you want to extend your lease, it's just basically solicitor paperwork you just need to do.
Right,
In order to get it done. But because it had a low lease, obviously the price was important. So it lowered the price for it, basically. At the same time, I was able to, while I was purchasing, I was able to extend the lease at the same time. Including the discount that I was actually getting for it having a low lease. Do the works, what I need to do to the property. 6 months down the line, I was able to remortgage it.
Amazing.
Get obviously the full value for what it was. In addition to that, I was able to take out some more money.
Right, okay.
So basically, I had the free property and I had money from the bank.
Fantastic.
So it didn't cost me anything. So that was a benefit there too.
Being someone that is obviously, you're an expert in your field, what would you say to your younger self now? Or what would you say to a younger person in order to get into property a little bit more quicker than 18 years?
Well, it's not a quick thing. I'm gonna be honest with you. Like, everybody wants instant results, and you're not gonna get instant results. You're gonna have to start very slow, and there's a snowball effect that's gonna happen. You know, it's gonna take time. You're not gonna get it. I see a lot of people online. They talk about how to go from 0 properties to 10. 3 years or 3, whatever it may be. I mean, if you can do it, great. I'm not doubting there's not other ways and strategies you can do it. That's good for them. But more than likely, that's not going to take place. You're going to have to start off with one, or you're going to have to build up enough money in order for you to actually buy the property yourself, depending on where you're buying it. For you to buy the property, you need capital. Now, how are you going to raise it? Do you get it from mum and dad? Do you get it from a trust fund? Do you have such a good relationship with people that have money that they will give you money? That it makes it more benefit for them. Are you a good middleman to make things work? So if I was looking to get into it, you really need to look at yourself. Property is not for everyone too, you know. Not everyone can do it. I'm gonna be just
that's real talk.
Not here to still a dream. Not everyone can.
Is it like people management as well?
Of course, I mean, but not. And also too, it depends on what you want to get into property. If you want to buy one, you have to ask yourself, why do you want to buy a property? Is the fact that you're trying to build a nest egg for yourself, for your family to be around? Is it because you believe that this property itself is gonna help me retire in the future? What's your reasoning on why you're looking to get into property? Is it a place where you just need a place to sleep, lay your head? If it's the case, then rent. You're good. Do you know? Not everyone needs to own a property as such.
I think that's probably what it is. Everyone's so hungry to own.
I don't think they understand the reason why.
And that's probably what it is. Because in some places, when I was in Europe, they're not as hungry to own. They're just like, they're happy to rent, and meh, it's nothing.
Rent, live your life, do what you need to do. Because to me, I've always weigh this up. If I was, for example, let's say you're starting your podcast here, for example, and you're looking to expand it and you want to go into various networks, etc., etc. Would buying a house would be the first thing on your mind to do?
No,
You would obviously want to preserve your capital if you've got it saved up to invest in yourself and your business to make it grow.
definitely.
That's what you want to do. So when you invest in yourself and your business to make it grow, hopefully that you'll be very successful in terms of what you need to do. That you could turn around and buy whatever house you want cash. And you're good to go. Now, not everyone's going to be able to buy the house cash. I do recognize that.
I receive it though. I receive it. I receive the blessing.
But in terms of what you're looking to do and where you're looking to go, you're better off investing if you've got an idea and you're hungry in terms of where you want to go, to invest that money into yourself and your own business. Because when you rent, it gives you a lot of flexibility. Right now, you just give 2 months notice and you can go wherever you want to go. You've got nothing tying you down. You don't worry about if you was to lose any equity inside the property itself.
It's true.
You don't have to worry about if you're tied up and to another 6 to 9 months. You don't have to worry about calling up your lender to get permission to rent it out. You don't have to worry about any of those factors. It's not yours. It belongs to someone else. Gives you that flexibility and freedom to go anywhere you want to go throughout the world. 2 months, pack up, you can go.
So are there any, like, I know property is our topic of today, but are there any other things you would recommend people to invest in? Because yes, you can invest in yourself, but people want to invest in things.
Listen, I'm not a financial advisor.
Then I mean, like, you know, people say, do you know what? Not to say that you are advising, but you're just recommending. So let's just say you'd recommend people are doing, I don't know, Bitcoin or...
I mean, yeah, that's what I'm saying. I do invest.
Gold, I don't know.
Yeah, I mean, there is everything that seems to be moving in the digital realm these days. I mean, it's a new era. I mean, I'm sure my age right here, but it seems of like when I used to hear my parents speaking about how things have changed.
Yes.
We've gone through a technological phase.
Yes.
I'm starting to see it now. And because everything's now moving digitally, like in terms of even how we communicate right now, there's a lot of time when you talk to your friends, you hardly speak on the phone. You don't call them no more. You text, you know?
Yeah.
So what's the next thing? How are we going to be socializing instead of us actually meeting face to face? Like Meta's trying to bring out their metaverse.
Yeah, the
for us to go there and live
yeah,
in.
just virtual.
And I really think that's going to become a thing 10, 20 years from now.
Yeah.
Will the kids be doing it? I think so.
Yeah.
I think obviously that you can go anywhere in the world. You can be anything you want to be.
Yeah.
In your mini universe or whatever it may be. So I would recommend it. Obviously, invest in stuff like that. Yes, I think Bitcoin is something, digital coins.
Yeah.
Solid, ideally Bitcoin, Ethereum, and stuff like that is something to invest in for your future wealth.
Yeah.
I do advocate for that, me personally, but obviously invest what you can afford to lose at the end of the day.
Yeah, because I was just going to touch on, before we finish, on technology, because obviously in 2008, I remember it clearly with the whole credit crunch and stuff like that, technology isn't what it is today. So you have things like Airbnb, that was never then. Well, it may be some type of, but it isn't as prevalent as it is now. So how has technology helped your business grow?
Yeah, so you got certain platforms, for example, like when I run my business, I couldn't tell you the last time I opened up a laptop.
Really?
Yeah, to be honest with you. I run everything from my phone.
Wow.
So I can get contracts, I can send emails, I can send contracts, I can get people to sign certain things, DocuSign, have your documents. Only time I need to get hold to a laptop, I need to read like an extensive document if I don't want to squint my eyes, look at the screen, or I print it. But if I haven't got a printer or I'm not available near my printer, then I can open up my laptop to read. So in terms of technology, like you mentioned, like Airbnb, that enables as a platform to bring, once again, a middleman, to bring two parties together.
Yeah.
They take their fee. I get a majority of the funds since I'm the one providing the property. That person pays. They get the accommodation which they like. They get to do what they need to do where they're in town or wherever it is. Move on, and everyone's happy. So if you're a good middleman, for example, Uber's the same thing. They don't own cars.
I know, right?
They just bring people together.
That's right, yeah.
Do you know? So technology
using technology, it
does pay, you know what I mean? It pays a big part, you know? Bookings.com. All those platforms themselves, they don't own properties themselves. They don't own cars or properties. They just bring people together. Yeah. So if you're a good medium that can actually do that, bring the consumer and the seller together, then
you're good to go.
Take your fee, and you make it accessible.
Yeah.
And you make the experience seamless. That's also a good thing. Airbnb, like you said, you're touching on that. I know you probably want to touch on that. That's an excellent platform too if somebody's looking to get into investments.
Oh,
There's
yeah.
certain times you could rent a property, depending on where you are in the country. To London itself, you only get 90 days. And also, you'll have to obviously speak to the landlord or the owner of the property to make sure the lease actually permits you to actually
Okay.
sublet the property.
Right.
If
Okay.
you didn't own a property, you could go to somebody, hi, want to rent your property. Is it okay if I sublet it? The reason it could be appealing to them, usually when you work on Airbnb, it's short-term lets. People think, oh, it's going to be more wear and tear on the property. Not really, because you're going to have cleaners that are going to be going there,
That's right.
clean the property consistently after the person actually left. So more than likely, it's going to be looked after in a lot better fashion. You're going to have to you're going to have to redecorate the property yourself, do it to a certain standard, furnish it out, and you're going to be going around. Well, you should get visual, unless you're not doing it. Your cleaner will be going around there and obviously getting a visual inspection to make sure that everything's in tip-top condition with the property. So that can work out beneficial for both parties. Landlord obviously gets their property rented. You obviously can generate an income from there. The property will be looked after. The customer itself, the person staying, will be able to obviously get a nice accommodation.
That's actually a really good business idea, having a cleaning and maintenance company for Airbnbs.
Yeah, that could work.
That's decent.
Yeah,
it just kind of dropped in my head.
Yeah,
I just put that on recording, didn't
there's
I?
companies out there that actually do that.
Yeah, of course.
Well, if you speak to the right people and
specialize,
you know what I mean, you've got your infrastructure in place, obviously, so you could execute. Then yeah.
One thing you said, sorry, is you said a short lease. How long is a short lease?
Depending on what you mean.
Is it you said short lease? So is it 30 years? Is it 50 years? Is it?
It could go down to like 1 year, but
a
short lease. Anything that you have, I mean, the government are doing some changes right now. It's something called marriage value, where it becomes more expensive, I believe, after a lease drops below 80 years.
Okay.
There's something called marriage value, where the price of it determines from what it should be plus that versus what it would actually cost the actual freeholder.
Wow.
And there's like you meet somewhere in the middle where you pay them to extend the lease.
Okay.
For how much it would be.
Okay.
So, but lenders, anything under 80 years, lenders themselves, they don't tend to want to lend you money on a property that's under 80 years because it can become a bit tricky for them, because they look at the liability. Because once it goes down to zero, your lease, the freeholder basically takes your property.
Okay.
Because you just own the building, but they own the land. So you're basically paying them rent to be on their land, basically.
Wow, gosh.
And that's obviously in the covenants and the leases. That's actually in the sits in the land registry. So
okay. Gosh, there's so much I want to delve
haven't given
into.
the best
No, you have. No, to be fair, I'm following. I'm definitely following. There's so much more I want to delve into, but time is against us.
No problem.
So just the last thing, just summarize in terms of property. How can someone get into it? What is your best advice for somebody listening? And yeah, that's it really.
If you want to get into property, it might be good to work around it. So if you've got the means and abilities, say for example, if you personally know a developer, you could tag along with them and obviously work with them. Estate agency, I mean, those are usually the first people that actually get deals. So if you want to be an estate agent to understand how the market actually works, whether it's sales or lettings, you'll be able to meet a lot of vendors. You're going to meet the vendors regardless.
Yes. So
you'll be able to see the opportunities that actually come across that way. You'll be able to see developers want to be calling you up to want to be getting deals. You'll be able to obviously see how tenants are in terms of when they're moving in and out of property. So that's definitely a good way of obviously getting involved. If you want to be a packager, for example, go out there and source deals.
Yes.
But you need to know what you're looking for. So you need to obviously invest in yourself and get some education in terms of it. There are certain courses out there. I've been to much. There's some I've been to, but it's probably a lot of stuff that I already know. Watch a lot of YouTube videos.
Okay, fantastic.
There's a lot of free information that's out there. Not everyone gives the right advice, but
and that's the thing, you wouldn't know unless you know.
But the good thing about it, you go out there and getting the information, and you have to understand that you need to make mistakes. Once you make mistakes, you'll be able to learn from them. That's how you grow.
Yeah.
And that's the best life lesson in terms of when you go out there, make mistakes, especially younger, because you can recover.
Yeah.
If it's a case of where, I'm not saying if anyone wants to get involved if they're like 50, 60, but more than likely time is not really on their side. If you're like 20, 25, you got a lot of time on your side to make mistakes.
What opportunity, yeah.
And especially if you've got the ability, if you can, obviously stay at home as long as possible, I would say. If you're going to get in your property journey, don't try to do it all in yourself. If you've got the means to stay at home with your parent or parents, stay at home with them.
Yeah.
Do what you need to do.
Yeah.
Get on the ladder. Even when you get your first or even second property and you can remain at home, stay there.
Yeah.
Save your money. Let it grow. Let your equity grow. Take it, and then when it grows, you can take equity out from there. You can grow from there.
Okay, that is sound advice. And social media, you're not really on social media?
No, not really.
Nah, is that because it doesn't work for you business-wise, or you're just not really in it?
It's not really into
it. Yeah. And it's really good advice, actually, because I feel that people are like, oh, let me go on social media to, you can build relationships from there, but you've really emphasized it's just natural relationships you just built, like going to meetings.
It's probably a different area, that's what I'm saying. So now, there's a lot of people who make a lot of money from generating with people on social media. And if that works for them, great. Do you know? That's not something I really, that's my personal choice. That's not an avenue which I really want to
explore.
But if it works for you,
it works for you.
But I think obviously that is going to be the future in terms of how you connect with people.
Yeah.
So definitely, if you've got a social media presence, but you have to be offering something. A lot of people I find get on social media and they just want to take. You know, what are you offering? Like, where's their medium? Where is everyone going to be happy here?
Yeah.
The only person that's going to be benefiting is Instagram, TikTok, or
it's true.
All those other people. Who's going to really benefit?
It's true.
So anything that you're actually offering, you need to make sure that you're offering obviously some form of value. And if you're offering value, make sure obviously the person receiving the value is going to be happy. Therefore, everything can grow from there.
Thank you so much, Stafford, for coming on the show. I really appreciate it.
Thank you.
So if anybody has any questions, please like, share and subscribe. Welcome to Coaching with Leticia. And thank you again, Stafford, for being so informative. I feel like I've soaked in so much information. I almost need to place it somewhere.
All right, cool.
Do you know what I mean? But I understood everything that you said, and I appreciate you sharing your time with me today. All right, guys, thank you. And hopefully I will see you on the next episode with Coaching with Leticia. Take care, everyone. Bye.